Hey guys, you're welcome to my YouTube channel. This is Synthetic Goddess. On this YouTube channel, I teach strategies to become profitable in the financial markets, even if you're a beginner. So if you're new to this channel, kindly hit the subscribe button and turn on the notification bell to be notified whenever I drop any video. Also, if you would love to join my Telegram channel where we drop directional bias, where we share analysis, where we talk about different things on synthetic trading, check the description box and click on the link to the Telegram channel. I trade the synthetic market, and on this video I'm going to be using volatility 10 index to explain. In this video I'll be using volatility 10 index for explanation in this video. So if you would also love to register with my broker, just check the description box and register with my broker, where you can trade 24 hours in 7 days and without stop. Yes, without stop. So on this video I quickly want to explain to you why I took this trade and where I actually took this trade, and where you can also be seeing the blueprints everywhere. How you can see the blueprint of this particular trade that I took, how you can see the blueprint in any, like on any instrument, how you can see the blueprint. So I'm going to be giving a detailed explanation about that. Just follow to the end so that you can get precision and also know how to take your trades. Yes, how to pick your trades so that you don't just enter the market anyhow. I know a lot of people will say I entered the market in the middle of the market, but trust me, this is the sweetest trade. This is a very sweet trade. Like, if you take a trade like this, you know that you have peace of mind. You are not struggling with the market, you're not forcing the market. The market has given you its direction. All you are just doing is following the direction of the market. So you are not really doing so much in the market, you are just following the direction of the market, and you are not risking so much. You're risking very little. You are risking very little. Immediately I saw this trade, I just entered it. Immediately I just saw the blueprint, I just entered it. I didn't even really analyze, but at the long run, when I entered the market, I'm so conversant with the market. So I know the major reason why the market did this. That was why I entered the market. So if you are just someone like that you just come into the market and then you just boom, you enter into the trade, you are not experienced, you don't know what the market is doing, you will end up losing your money. Okay, because of this volatility 10 index, it's one of my best trade, it's one of my best instruments. So I analyze it more often, so I know what exactly it does, and I know the time frame analysis, I know the higher time frame analysis, and that was why I was able to enter this market. I still analyzed top down analysis on volatility 10, I think yesterday. Yes, I analyzed the volatility 10 top down analysis yesterday. So if you just enter the market and then you just jump into the market, you're on your own. So I know what the market is already doing, and that was why I followed the trend. So let me just explain it better to you. Remember, we are always starting from our daily time frame. Once we start from our daily time frame, we know what the market is doing, and we'll be able to follow with the other flow of the higher time frame. So I'm just going to be starting from the daily time frame. I don't really need so much information on the weekly time frame. Checking this on the weekly time frame, we actually got a first intent for a buy move. Let's just check the weekly time frame. We got a first intent for a buy move, which is this. We got a first intent and for a buy move. Okay, this is a first intent for a buy move. So this weekly time frame already showed me that it is possible for us to be buying like massively. We should buy the market massively, but it's still not a real confirmation for me to just enter anyhow. So I just entered the daily time frame and I checked what the daily time frame is doing. Now this is not my first break of structure. I'm not going to count this as my first break of structure. I'm just going to count it as an intent for me to enter into the market. The market gave me a an internal break of structure. Let me put it that way, an internal break of structure. This was where the market gave me an internal break of structure. Remember I said internal break of structure, we've not had the real break of structure, so the market can still do anything. I mean anything. The market can just get to the middle of the way and just shank you. So you just have to follow what the market is doing. You just have to follow what the market is doing. So we have the internal break of structure there. Now I am rest assured a little that I can look for a little buy move and continue to the upside. So I just check the 4 hours time frame. I can see what the 4 hours time frame is doing. And yesterday when I saw this market, I saw it around this place, and I marked out my PO high to be this place. This I marked out my PO high to be this place, and as you can see, the market respected the PO high. The market moved a little to the downside, and it didn't really give me my entry confirmation, so I didn't enter the market for a sell. If I had entered, I would have told you guys that I entered and it shanked me, but I didn't enter for a sell here. I just saw the market and I noticed the displacement to the downside is not so favorable, so I didn't really take the trade. I just calmed down. You know, patience is very, very key when it comes to trading the financial market. So immediately I just saw this, I didn't really see a good displacement to the downside, so I just left it. I just left that PO high. Now immediately the market broke out the PO high. I knew that was a break of structure for me to the upside. That was my internal break of structure. So I just marked it out that okay, this is a break of structure. Since the market did not respect the PO high by going to the downside, I am marking this out as a break of structure. And when market got to this point, I was actually thinking the market will give me a good reaction to the downside and I'm going to just get a buy move. But the market didn't really give me it didn't really give me a good retracement. So but the market came here to give me a good retracement to a PO high. So let's just check out the PO high on the 15 minutes time frame. You know, this is the 4 hours time frame. If you check the 1 hour time frame, okay, let's just check the 1 hour time frame and then let's see what we are doing, so I don't confuse you guys and you guys can really understand what I am saying. So we had the break of structure to the upside. Remember our break of structure to the upside. We had the break of structure to the upside and we had a good retracement. We had a deep retracement. This is a deep retracement, so I am not expecting the market to actually come back and take this low. So this is a deep retracement, so I am just marking out the break of structure to the upside. So this is a break of structure. I'm coming. This is a break of structure to the upside. You can see I even used a square to mark out the break of structure to the upside. And when we had the break of structure to the upside, my PO high was here. Basically my PO high was here. But why will I enter the market because it got to a PO high? No, I won't do that. So this is the PO high here. At first I wanted to enter this trade at this area. I wanted to enter it with this movement to the upside because it gave me a confirmation, but it wasn't a solid confirmation. So I just waited, and this is the POI that I marked out, and then you can notice that the market came into the PO high properly. But as you can see, I don't want to risk so much. I don't want to risk so much of my capital, so I did enter at this point. I saw all what the market was doing, but you know the market can change. I mean, the market can literally change and then it will just take you out of the market. So immediately I saw the market there, I did enter the market because I knew the market could change. I can't predict every move of the market, you know. So I just waited. Like I just keep my cool. Then I on the 15 minutes time frame, as you can see on the 15 minutes time frame, we had this impulsive movement to the upside. This was what validated me that we have a change of character. We had this break of structure here. There was a break of structure here. This was a break of structure. And on the 5 minutes, like I always tell you guys, entry confirmation. So on this time frame, I had the break of structure here, the internal break of structure, and then I noticed all other ones were giving deep corrective wave. So this one is my real break of structure. We have the break of structure here, which is a change of character. And on the 5 minutes time frame, remember our inducement rule. So I saw that this was an inducement rule, and the market took it out, and immediately the market took it out, I entered the market. I mean, let me just show you 1 minute time frame. Let me just, like, immediately the market got to this area, because immediately the market got here, I just entered the market sharp. Like, that was when I saw it, and I saw that inducement. So I just entered the market. I entered with one entry. Like, I entered just one entry. I entered with just one entry, and I noticed this movement to the upside. Immediately I noticed this movement to the upside, this bullish movement to the upside. I just opened I opened 3 more positions. Yes, I opened 3 more positions. Like, okay, let me see what the market is doing. And the market was going up and up and up. And when the market broke this low, I knew the market was coming to somewhere around this place, because this is a break of structure. After we had the break of structure, all these ones did not get into this place. It did not get into this PO high. So I knew the market was coming to this area, but I wanted to keep my positions opened. In fact, I will soon close some positions now and wait for the other position to get to TP. So immediately I noticed that the market broke this low. I knew the market was coming to an area like that, because this place was not tested. So the market could be coming back to this area. And see what the market did. It came back to this area. My trade did not give me any loss, and it started moving to the upside, like, massively. It started moving to the upside massively. As you can see where the market is right now, my target is actually this high. This is my target, but to be on a safer side, I am taking out profits from this PO high. I'm taking out some profits from the PO high, and I am waiting for the rest to get here, and then I'm going to break even my market. Like, I'm just going to put break even there, and then just watch what the market will do. And that is it for me. Like, that's just all for me. So it is very, very simple. Analyzing the market is very simple. You just have to keep calm. You just have to relax yourself, relax your brain, and just check what the market is doing. Let it give you this blueprint. Like, this is one of your surest trade. Like, you can risk good on this instrument, like this. Seeing the analysis, you can risk good percentage from your account. You can risk good percentage from your account. So that's just it, guys. Like, just check out for all this entry confirmation and enter the market. It's going to serve you better, and then you're going to be profitable at the end of the day. So that's going to be all for now, guys. I'm going to see you in my next video. Have a wonderful day ahead, and happy weekend to you guys. Bye, guys.